Hey traders, Nick here, looking at today's price action. Today was January 10th, 2019. I'm always looking for little lessons here and there as far as my perception or my take on the charts. And this is an intraday look on multiple things. Right here we have Apple. These are 5-minute candles. And by the way, this works on any time frame. But this is for the purpose of saying, okay, today we had a little scare, but we also had a rally, and that second bounce was kind of like in danger at some point. So here's what my take on things. Okay, so you've heard the saying of the tail that wags the dog, and Apple is often that tail. So we're looking at Apple. We're looking at the S&P. That's the SPY. We're looking at the NASDAQ. These are the QQQ ETF again. And this is the DIA, which is also the Dow ETF. Apple is in all of them, and it's a heavyweight. So today we had an open down, and then a rally, and then hesitation, and then a bounce, and then Powell started talking, and then we fell apart. And then this is where we fell apart as far as the indices are concerned. And right around here, the emotional decision comes in. So again, we opened down, the S&P, rallied, and then Powell started talking, and they misinterpreted what he said. He said really bullish things for stocks. I think they misheard it. But anyway, so we started falling. And this is where the emotion comes in. Oh my gosh, I need to get out of my longs if you're actively trading. But there were clues to tell you hold off a little bit. First of all, from this chart's price action, you can see that there was some sort of a cluster of action right here. And then they changed the game. So they came back to that same level of that cluster. So it should be some sort of support, congestion. Buyer and sellers will fight over it again. There were more clues, and this is the point of this video. Know what drives whatever you're looking at. So in this case, I'm looking at the indices. I know that Apple is a big guy in there, so I have to have Apple open somewhere. And that's where this one comes in. Okay, so I'm going to draw it out. Apple point of control, basically where most of the action happened at the time where I was looking at that, was 152.21 or something like that. Let's call it 152.30. I just drew the line. And Apple is falling towards it. So if I were long, I wouldn't get out of my longs of the S&P if I'm trading longs in S&P until I see what happens here. So I thought, okay, I want to see what happens to Apple at 152.21 or whatever it was. If it holds it, then the indices have a shot at finding footing. And it bounced. And then it took another dip. And that's where, watch across the screen, the plus moves on the other side too. So markets fell apart with Powell, and then they caught their footing. Apple fell back down. Now, it would have been bad if it lost this, because now it looks like a bearish pattern, an inverse cup and handle. Would have targeted this. But look at the right side right here. At the same time, look. This is where the indices were waiting. What's going to happen with Apple? And then Apple bounced hard. And then zigzagged up. ABC, whatever you want to call it. So, the point of this video, don't just act on emotions. We all see it. I mean, it falls, I feel it. And then I look at other clues. What do I have? What information can I gather from something else to help sway me? I looked at Apple. I was like, okay, now I feel better about it. And now I have an action plan. What happens at 152.21 or 22? Then I decide whether I get out or not. That was my, I had short-term trades, and I was looking to see if I would stay in them or not. They were IWM calls. I stayed in them, and they were 15%, 18% winners by the end of the day. So was the right decision to make. However, I had the action plan to get out of them at flat or a little bit green if Apple lost this footing. I know IWM has nothing to do with Apple, but markets move in tandem. Okay, so I did mention IWM. Side note, so if I put IWM here, similar patterns because markets move together, but I would have been looking at XLF. Why? Because it's about 20% of the market, and this is the ETF for banks. So I would want to see if they would hold their footing. XLF. Also, drilling down even closer, I'd probably look at Square. Square is an honorary bank. It moves with the financials, so it moves with the XLF. Only it's a momentum stock, so it moves a lot faster and almost always before. So if bids start to come into the financials, I'll probably see it first in Square. And then that helps me look at the XLF. That helps me decide on the small caps. I would probably also look at crude oil, because energy is a big part of the small cap. So if I'm trading something, I better have all the other big portions of it on my screen somewhere. But again, the point of this video is to see how Apple today helped me not get out of my longs at the wrong time. When markets were falling, I wanted to, you get the, I got to get out. Oh my gosh, you're falling out of bed. And then if you had the tail that wags the dog and you knew what level to get out of, the point of control there was 152.20 something. I know this is granular, 5-minute candles for a lot of you, but it works on longer term time frame, bigger, wider time frames. All right, Nick signing out.